So should we buy this buyback stock ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So buybacks, there's quite a few companies that have an active program of buying back their stocks. Those kinds of stocks are popular to buy because you have this, set force of buyers, that come in, the company buying back their own stocks. So there's something bullish about being, a buyback stock. So these are global stock buybacks, 2.41% from the 52-week low, but it is minus 31% away from the highs. So notwithstanding that, these companies do have an active program of buying back their shares. So they do add buying pressure to the market. Obviously, it hasn't been enough. But, generally speaking, the more people you have buying stock, the more bullish it is. Obviously. Here is the chart for the IPKW Invesco International Buyback Achievers ETF. You could make a pretty decent case, and I would make the case that this is horizontal support. Does this mean that horizontal support will work? No, it means that the bulls that look at technicals, they have a reason now to turn a bit bullish. When we were just hovering in mid-here here, they didn't have that many reasons to be bullish because we had resistance up here, but at this point we do have a major support level. This is interesting. It's an opportunity. Looking at the daily data points here, you can see the support levels in more detail. I think this definitively looks, we do have a MACD buy signal here. There are some interesting developments. Here is accumulation distribution. I would like to see it higher. So there are it's a bit messy here. So I write that the entry signal stop loss is horizontal support. This is major horizontal support. I will give the bulls a 4 here on the technicals. Obviously, if we were to lose horizontal support, that is not good. Like in the real world, if you are standing on a floor and the floor falls out beneath you, that's not good. That's very bad. So hopefully this floor will hold. Let's look at the seasonality. To the right here, over the last 5 years in green, 7 years in blue, seasonality is pretty decent. All the way into late December. Over the last 5 years here to the left, we do see that September is a weak month, but October, November, December are significantly stronger. Big picture, last 9 years, September is a weak month. We are still in September. Then again, October, November, December are pretty darn strong. So if you are a bear, and you are short this ETF, and it's now currently the 17th of November, no, September, 17th of September. Do you want to be short this ETF into October and November and December? So you are probably considering maybe, tightening your stop loss level. So I do give the bulls a 3 here on seasonality. The seasonality is strong. The problem I have is that the seasonality for the current month was a bit, and we also had a bit limited amount of data when it came to this ETF, but overall I think that, the bulls have reasons to be optimistic about the seasonality. Let's compare the International Buyback Achievers ETF with the S&P 500. Looking at performance, year to date, the Buyback Achievers are underperforming the S&P 500. That's not good. Beta is a bit higher. That's also not good. PE is almost like half. Yeah, that's more bullish. Yield is a bit higher. Looking at the holdings, 70 versus 506. Definitively big difference. Here is the sector breakdown. Finance is biggest on IPKW, but that's not a huge shock because companies in the financial sector, it's they. One thing is that it's more natural for them to their sectors to buy back shares, and also because of being in the financial sector, they also know more about buybacks. It's just way easier for them to do it when they know it. Well, as an example, for like companies in the transportation business, they could also buy back shares, tech as well, but it might be more like foreign to them, like how you do it, how to do it correctly. So it's just a different thing. I will give the bears a -2 here on the fundamentals. Here are correlations. Long term, we have 84% with S&P 500, 56% with the high yield ETF, HIG, 16% with the 10-year treasury, the yield, -56% with the dollar index. Daily data points, 79% with S&P 500, 89% with high yield, -74% with the 10-year yield, and -95% with the dollar index. So short and long term, I think the strongest correlation we got was with the high yield ETF, HIG. Let's type that in, HIG. We start here with the weeklies. This ETF is clearly in a downtrend. The bond market has gotten really clubbered. But as I have said before, the bond market is much more important than the stock market. The bond market just crashing is really a bad thing. If you look here, so this is in 2007, you see that the bond market was declining very systematically before it started to accelerate in the stock market. So the bond market was a bit of an omen, and here you can see it just completely collapses. What is interesting here is that you can also see that late in 2008, the bond market, the high yield corporate bond market, it formed a low before the stock market. A bit of a tepid low here. We did go a bit lower here in November, but there's this phenomenon where the very smart money is in the bond market, and the very smart money now is definitively bearish. But we are at a low level now that could form some kind of low. We are emerging from a very low level here on the weeklies, on the dailies, on the dailies as well. Let's now compare the International Buyback Achievers ETF with the High Yield ETF. The high yield bond market is also, called junk bond market. Yeah. Okay, so looking at this RSI level on the weeklies, the previous time we had some outperformance here from the buyback achievers. Back here, we also had the same RSI level that we have now. But in that case, we emerged from a much lower level. So you had a substantial momentum to the upside. Here it's a bit similar-ish, and we did get a protracted period of outperformance. So the current RSI level, well, the RSI level that we are emerging from down here, it has in the past been followed by more substantial periods of outperformance. So it's interesting. If we go here and look at the seasonality, the seasonality here in green over the last 5 years, blue over the last 7 years. The buyback achievers usually outperform junk bonds into the 23rd, basically into Christmas. So that's interesting. So I give the bulls 4 here on relative performance. we end up with a score of 2.3 in favor of the bulls. Horizontal support is the major entry signal / stop loss. So we have some time left. So let's look at some of the stocks in the Buyback Achievers ETF. But first, let's quickly look at the S&P 500. So a very ugly week. When we go to the daily data points, you see that we were rejected from the 200-day moving average back here, just a spectacular short level. And not that long after, we are below all of the moving averages. So yeah, looking to the right here, also on the dailies, there have been times where this RSI level has led to bounces and some lows. It's possible, but currently the S&P 500 is just in a messy place. Here is Roche Holdings, the top component of the Buyback Achievers ETF. Red 200-week moving average has been extremely tradable. You can see here that the bulls have just been testing it many times. 1, 2, 3, 4, 5, 6 times. And now we are seeing a rally. The problem for the bulls is that right above us, not that far away, is this resistance level in the form of the blue 100-week moving average. And that moving average was support-ish back here. So what was support has now become resistance. On the daily data points, we have cleared the blue 100-day moving average. So Roche it's interesting. There's things happening here. DiamondArm. I've never looked at this stock. It's on the Toronto Stock Exchange. Major uptrend. I mean, super strong. Let's look a bit at the RSI, because the question is, are we too late to the party? So the MACD here is just extreme on the weeklies. The odds do not favor continuation on the dailies. Yeah, when we are pulling back to this blue 100-day moving average, it has worked as a support level in the past back here, so it's an interesting level. Yeah, looking at this stock historically, it does have a bit of a tendency to have these vicious bear markets within a bull market. So yeah, maybe, but it's interesting, but maybe we are late to that party. What about SoftBank on the Tokyo Stock Exchange? Yeah, we are like below the 200-week moving average in red. Then again, we have been able to reclaim the 200-day moving average in red, day moving average, that is. So 200-week resistance, 200-day support. Conflicting signals, but that makes it even more interesting. Let's look at Vale, SA. Yeah, the 200-week is a big deal for this stock. We are, meaningfully below it. So it's a bit, just a lot of, it's a bit messy. Here is Japan Post Holdings. 200-week, obviously, it matters. And artificial intelligence can be a bit of a menace. I was just plagued by one of those AIs, that is voice activated. So I am just speaking here to you, and all of a sudden the AI is like, "Oh, what do you mean?" You're like, okay, yeah. The 200-week moving average, which the AI didn't help me with at all, it is here a resistance level. Resistance level. But there's a big but. We have now broken out above it. 2 weeks in a row, Japan Post Holdings has been above that resistance level. Daily data points, a bit of a breakout in development. RSI, it's high, but during momentum rallies, we have gone higher. But yeah, it's a bit, all in at this point, because when you have a breakout and the RSI is a bit high, it makes it more difficult. So, compare it to anything else, right? If I were to go for a run, when I begin running, it's easy because I have a lot of energy left. But after some time has passed, I will reach a certain zone where the odds of me having to stop has gone up a lot. So maybe I will set a new record, but the odds favor the average runtime. So that's the issue here for Japan Post Holdings. It's very cool that we have a breakout. But if we do pull back now, as long as we are able to use the breakout indicator as a support level, then it's not really a huge deal to have a bit of a pullback. But yeah, so we have in-depth looked at global stock buybacks ETF, and we have also looked at a bunch of the underlying components. So yeah, interesting things going on here. And whatever you do, you always use entry signals, stop loss, and get VIP access.